Hello everyone, it's Friday, May 10th. This is Liam McMahon with the Daily Moving Average video. About 4:25 Eastern Time, which means 25 minutes after U.S. equity markets have closed, 35 minutes until futures and Forex close. Usually those 35 minutes nothing happens, so I feel perfectly safe recording the Daily Moving Average video for the close. So we're going to take a look at some of the very interesting price action that we had to finish off the week, with the dollar really finishing off the week very, very strong. And we will be looking for opportunities for continuation and reversal, and which pairs will play that against, and what that means for crosses. So lots to look at. Please take a moment, pause the recording, read the risk disclaimer that is now on your screen, and then we'll get started. All right. So first, we're going to start with my favorite setup of next week, just why we're going to start with it. It's my favorite. That is the pound dollar daily chart. I have been harping on this pair forever. It's been a couple of our chart of the days. It's been in all my videos. And it finally paid dividends yesterday and today. It took its sweet time. I've been talking about this since the 25th of April, maybe. So it took its sweet time, but it's finally starting to pay off. We held this 50% fib perfectly. That is enough in and of itself to make me bearish. The fact that we rolled over nicely on top, underneath that 50% fib and 200-day EMA, that's the tan line, and then fell beneath it, very significant to me. It looks like we're going to finish the week and the day below this 50-period EMA. That's red, 50, 100, 200, red, green, tan. It's going to be close, not a convincing close beneath it, and we did hold the bottom of this channel. So very possible that we see a bounce at the beginning of next week, perhaps up to test the bottom of this 100-day EMA and previous congestion area right around 154.75 before rolling back over, heading lower, eventually breaking this channel and turning this into one giant bear flag. If that is the case, the measured move is about 1,500 pips lower, so you can do the math. It's somewhere in the 130s. So big potential on pound dollar. Also possible that we continue bouncing within this channel up to this 618% fib. That's at 158. So that's something to keep in mind if you're looking for opportunities to short the dollar. That's where you're looking. Let's get rid of some of these drawings. This is euro dollar. Actually kind of a similar setup here on euro dollar. Rallied, we wicked above that 50% fib, couldn't close below it, and now we're finally starting to roll over. We did have this significant moving average cluster I pointed out below before, right between 130.63 and 130.33 or so. All three 5100s, the 5100 and 200-day EMAs were all clustered there. We did break below them today. It does, I feel safe saying that we will close the day below all three of them. Meaning they now serve as resistance on about a 40 to 50 pip bounce. Watch these three daily moving averages here, any sort of bounce for opportunities to sell. Same thing, this also has the benefit of starting to look like a giant head and shoulders. Not much of a top, but it is a very large, very aggressive pattern. Could see a move break below these 127 lows and head back down towards the 120 lows. So that's what you want to keep an eye on euro dollar. Aussie dollar hurt pretty bad today. We did touch that 618% fib. We did wick back above it. And the other thing that we had to consider on Aussie dollar is the distance that we've now put in from these three key moving averages. You can see that they've traded pretty close to these moving averages starting back here in September of last year. The pair would spike above and below the three moving averages, but they stayed relatively steady. And price returned to them each time. We're now further away from these three moving averages than we have been since really these back down here, these 95 lows. So you do want to keep an eye on for some sort of mean reversion, as we have opened up a very significant gap between these three moving averages on a pair that lately has liked to stay fairly close to them. So we could see some retracement consolidations, let the moving averages play catch up at the beginning, really the next week or 2 weeks after this violent move lower. But for now, retracements back up towards 102 should be sold. In my opinion, we'll look for opportunities perhaps to get long down here for that move higher. Again, as we do have significant fib support, and we are very far away from those key moving averages. Let's take a look generally at the dollar index. You can see we spiked up into these previous highs. I still like the dollar index long, held this 50% fib, but this would be an area for further consolidation and chop. Let's take a look at gold. Very interesting finish on the day for gold. You can see we broke this nice range that we had, and then at the end of the day, the pair brought it, or the commodity, I suppose, rallied right back up and through it. It is well capped right now by the 50, 100, and 200 hour EMAs here on the hourly chart. Those come in right around 1456.60 or so. So we'll see at the beginning of next week if it respects those moving averages or if this is a false breakout before higher. Equities managed to finish the day higher. This is E-mini futures up by 0.75%. Still well supported by 50, 100, and 200 hour EMAs. You can see that they have been backboning, really especially this 100 hour EMA has been backboning the rally and again provided a bounce at the middle of the day today. So that's going to be the first stop for bears, is we're going to need this 100 hour EMA to fail. So long as the price holds above it, risk remains to the upside. I had some requests, so let's cover those. Dollar Swiss. Good Lord, let me clean up this chart real quick. Okay, dollar Swiss aggressively higher today. This is a 4-hour chart. You can see, again, same problem. Fairly far away from these moving averages on a pair that has stayed pretty close to the moving averages of late. Could be enough to spur some sort of correction consolidation. Significant support comes in here around 94.75. Look for those moving averages to play catch up into that area as prices likely to consolidate on dollar Swiss before, again, I think eventually continuing higher. Dollar CAD had a good day today on not as than worse than expected, I think is how you phrase that. Worse than expected employment numbers out of Canada. You can see the pair rallied off of these basically just off parity lows. We did rally right up into this 200 period EMA here on the 4-hour chart before falling back here at the end of the day. Moving averages are bearish, 50 trading below the 100, which is trading below the 200. So that is a bearish configuration. And price so far is capped by those. We need to get a move back above this 101.50 figure, reclaim that 200-day EMA, and again start to use it as support for a move higher. So that's the first key for dollar CAD next week. Should it fail to do so, I mean, this 200 period EMA here on the 4-hour chart, also the 50% fib pretty perfectly. Could be in for another move, equidistant move lower, take us down to those 99, 98, 75 region, kind of go from there. So keep your eye on dollar CAD, opportunities in either direction for next week. Real quick, pound Kiwi. Pound Kiwi tough to trade here. Well supported by this 50 period EMA. I'd look to buy dips back down to that 50 period EMA here on the 4-hour chart. There's also a trend line down there, but not my favorite pair to trade. Euro Kiwi, a little bit clearer actually. Have this area highlighted. It's significant Fibonacci resistance. It's also a putative bear flag top perhaps. Same thing, look out for these moving averages here. We did just have a golden cross here on the 4-hour of Euro Kiwi as the 50 crossed over the 200. So that does suggest the possibility of further upside momentum to come on Euro Kiwi. Alright, that's what I got for you today. I hope that's helpful. I hope you guys have an absolutely terrific weekend. Get some rest and look forward to working with you next week.